Welcome. You've just entered the Trading Pit, your home for sophisticated takes on the crypto markets. It's March 7th, and here in the studio, JJ and Benjamin of J Labs. I am, of course, Marconi White. Welcome. We're so excited to have you here. We're going to be kicking off talking a little bit about ETH and altcoins, but first, we're introducing a new segment I like to call Rapid Fire, kind of get these guys set up to talk for another 45 minutes. All right, Benjamin, JJ, I hope you guys are ready. I want simple answers this time. All right. First one, Benjamin, Michael Saylor, Bitcoin savior or future rugger?
Savior.
Oh, he's savior. I like that. All right. JJ, Bitcoin, 100K or 30K first?
100K.
Oh, we got the bull coming out. Benjamin, Binance or Coinbase?
Binance.
Oh, all right. I know they got the legal woes. We have to get into that. JJ, AI or meme coins?
Meme coins.
We're going to get in that one too. Benjamin, last one. Pepe or Bonk? This one's for all the marbles.
Bonk.
Oh, giving a little bit of love to Solana. I like that. All right. Well, let's get into it. Today's top story, as I said, is going to be about ETH and altcoins, which have just skyrocketed. On Tuesday, we saw that pullback, which I'm sure we'll get into a little bit more and talk about that breakdown. It came out after we recorded. And after that, ETH and the rest of the market went on a tear. You saw Ethereum up, Solana up, and then you saw the areas like AI getting bid. I think I saw Near was up 41%, Render was up 46%. So Benjamin, I want to ask, should traders realize some profits here, or can they expect some more upside?
I think spot traders should hold. There's nothing wrong in taking a little bit of profits, but spot traders, I don't think they should worry too much. But leverage traders, they definitely should keep taking profits, especially given how the funding rates keep on increasing like crazy. Just holding it is an expensive deal. So take profits, and there's always a buy the dip situation.
Well, what are you looking at exactly that's giving you that perspective? Is it just the funding rates that's indicating that the that we may be a little overheaded from a leverage? I mean, that is what happened on Tuesday. Was we saw a large washout of the leverage. We didn't see it on the spot side. ETFs accumulated record number. I think was 700 million or north of that. So again, is it the funding rates that you're looking at that give you a little bit of pause to take some off the table if you're sitting there outside of spot?
Yeah, I mean, funding rate is one of the important ones, but it doesn't mean that we are going to get like a 40% correction on altcoins. But it's simply that it's a bit expensive if your coin of choice is not moving. So when we look at the tiers that are basically moving, the sectors that are moving, it's basically AI and meme coins. If you look at most L2s, they're not moving much. If you look at the new L1s, such as Sui, Aptos, and all those, they're not moving much either. Everything, whether it is Tia, Sei, Sui, all of those are in I would say in a 1 month range, and consolidating. Injective is probably in like a 3 month range. Take Link, for example, it has been in a never ending range. So there's a lot of tokens which are high quality tokens, and they're all consolidating. So the only ones that are pumping is AI and meme coins, and that's not always the best of sight. So.
Well, we talked about it on Tuesday. Obviously this has been in the past a sign that we're about to see a consolidation or a sell-off. Ben Lilly also commented that the fact that this can actually happen at the beginning of a bull market. So it can be a little bit confusing. But let's actually talk about, getting into the next altcoin, which is sort of the king of the altcoins, which is Ethereum. JJ, speculation is that ETH is going to get that ETH ETF, and a lot of the price action is coming from that. And there was some discussion online, I think, that was giving some good perspective there. You had Jake Stravinsky, who was putting out, I think, his view that this isn't going to happen, and that the policy in DC really isn't accommodative for an ETH ETF to move forward, even though we saw something on the spot Bitcoin ETF. And Travis Kling, who's the founder of Ikiagi Fund, if I'm saying that correctly, shared his thoughts. And he said, I don't think there's much expectation of a May approval. It's really that folks are circled around the August deadline. And that's when BlackRock's ETF is looking to get approved. obviously, as I just mentioned, Jake shared his perspective saying, I don't think it's quite as guaranteed. What do you think happens if that plays out, that May, June, July, all those ETFs get denied or pushed back, and then we get to August and BlackRock actually doesn't get its ETF to go through? What do you think you see from an Ethereum perspective?
I think in either event, so I mean, obviously Jake knows more about the legal process than me, just a janitor on the internet. But from my perspective, I think it's probably, I think you'll see it play out similar to the way the Bitcoin ETF played out, where they delay it for as long as possible, possibly even beyond the August deadlines. They find some loophole to extend that, and then eventually it'll get approved. But the timeline of knowing when it'll get approved, it's unknowable, right? Like they could stretch this thing out the same way they did the Bitcoin and cause max, disbelief, confusion over it, and then finally approve it at the 11th hour. So I think that's kind of the mental framework you should have in mind here. And at times when ETH is getting overextended, as I think it looks now, like obviously we're up from, I think we were around 2,000 in January to now nearly 4,000. That's kind of a sign of overextension. And when I look at the Bitcoin ETH chart, all it says to me is that the bottom for this pair isn't in yet. And if we look at the past cycles, like we see kind of, I pointed this out a few times, but you'll see it in the volume. So whether that's on Binance or Coinbase, you'll see extreme volume when the bottom is actually in here, which we haven't seen yet. People rotating from their Bitcoin holdings to ETH. And I think like if we look at 2020, 2021, the bottom came in after Bitcoin was above all-time highs on the ETH BTC pair. So Bitcoin was roaring over 30K and the ETH BTC pair just kind of had the bottom fall out, and that provided the ultimate bottom entry here. So I think we'll see something similar along this. So it'll be kind of a time-based capitulation on ETH. People will give up on it, rotate to Bitcoin. Bitcoin goes over to 100K. And then when the market's least prepared for it, we'll see ETH finally have the face-ripping rally to whatever, 10K, 12K, pick your target. It's going there long term, but just understand that they're going to pull all the levers they can to procrastinate this as long as possible. Washington, D.C. does not like crypto, especially not altcoins. So it's going to be a very long fight, I would expect. And I don't think it's a certainty in the near term, but I think over the course of, a year or so, it is a certainty.
So just to map that out, you're saying you are expecting that consolidation. We just had a question come in here from Strata Trader, which was asking about that pair trade. Are you looking more, what would be a price target that you would kind of look at if you're expecting this capitulation? And I apologize if you said it, I may have missed it.
It could be a double bottom, so it could be something below 0.05. It could happen higher. The market will tell you in the form of volume, right? Mm-hmm. So when you see other people taking their money and rotating into this in size, that's a sign that the market knows something that you don't. And I haven't seen it yet. So until I have that, I'm not sold that the ETH BTC bottoms in yet. I see a scenario where BTC rips up above all-time highs, similar to here in 2020, 2021, where BTC kind of sucks the air out of the room. ETH will still go up in dollar terms, but is it going to go up versus BTC? Most likely not, and then it will in a major way. Probably take out these highs here from 2021, possibly all-time highs from 2017. And that'll happen, but just understand that I don't think it's here yet.
Okay.
Until we see that volume, I don't believe the bottom's in yet for the pair.
All right. And there's a two-part question. I think there's actually maybe three parts in here. Does ETH finally flip Bitcoin this cycle? Benjamin, I want to put that one to you.
No, I don't think it flips Bitcoin.
No, that's some conviction. Come on, let it out there. Let the lion roar. Let us know why.
Anyone who has spoken to me would know very well that I'm a BTC maxi, and I don't think, despite Ethereum being the layer of it's the Web3 layer of internet in a way, still it's getting quite a lot of competition from other L1s, and its own ecosystem of L2s are actually eating up a lot of its share. So I don't think ETH, flips Bitcoin and so on. I think that's outrageous. I still think it's outrageous because BTC has the infinite TVAP bit that is happening anyway. And we have to wait and see how the ETF for ETH plays out as well. So, yeah. I mean, BTC, they're using it as a store of value, right? It's not used much for transactions anyway. So you're not using it to actually make payments. Everybody's using it to trade or hold. It's become like gold. typically. But ETH is still the token that we are using to issue NFTs, to go and trade, to go and swap around, to send USDT. So it's a big pain when it gets over expensive and gas fees skyrockets, and that's still not solved. So it's good when gas fees gets high for the network. Yes, validators make money, but doesn't help the network grow beyond a point.
All right. So I'm going to summarize your point. You say no. I put that at less than 5% is your probability that it actually flips. You'd have to see some changes in the narratives, perhaps an ETF come online. JJ, what about you? What's the percentage you would give odds that ETH flips BTC this cycle?
Yeah, I would say that's below 5% for this cycle. I think
Okay.
long term, possibly over the course of like the next decade or so, I could see that happening, but I don't see it happening within the next year or 2 years. I think the narrative of BTC will be too strong. And like Benjamin said, there's a lot of the market's still trying to figure out, is ETH ultimately the best L1? I think it is, but the market, it's still undecided, right? So we see a lot of traction in Solana, different L1s and whatnot, and it's going to take a long time for ETH to just steal the show there and underscore its use cases, and that'll come probably after ETF, and we see institutional adoption of things like DeFi and whatnot. It'll come with time, but I don't think it's imminent within the next year.
Yeah. Okay, well, they're Strata Trader. There you have their views. Less than 5% that ETH is able to flip Bitcoin in this coming cycle. I want to say good morning. Good morning. We got 251 Legacy Trail from Seattle. Scott Ream, Alstar McLean. Hello World, I believe, from Toronto. Paul J. and Strata Trader. Morning. So good to see you guys here. And thank you for the congratulations. That's right. We've hit over 1,000 subscribers. And thank you to all who showed up early, ready to start the show. Help us support us so we can support you. If you haven't already, hit the like and subscribe button. Share this with everyone, your mother, your brother, your little sister, even those little ones, those tykes that aren't ready to trade. They need to know crypto now. It is the future. All right, well, let's get into the future as many people see it right now, which is meme coins. I started off asking you guys about memes, AI or meme. Also got your take, which was Bonk over Pepe. They've continued to rally. I think the numbers I looked at this morning, just in the last 7 days, each of the top three in terms of volume, Doge, Shiba, and Pepe were up over 100%. And if I look at their market caps, I mean, they're quite insane. We got Dogecoin at 22 billion, Shiba at 18, and Pepe at 2.8. Just to put that in perspective, we've got coins that are arguing they're going to solve massive problems decentralizing the web that haven't even cracked $1 billion in market cap. Here we are with Dogecoin at 22 billion. Benjamin, we were talking offline about the power and the allure of these and how investors are looking at these as an entry point. I want to talk and get your perspective on this, meaning that retail is back in the game. We're looking for signs. We have YouTube and other types of social metrics that say retail isn't here. We've talked about the fact that this feels like we still have the same people that have ridden out the bear market, or mostly ridden out the bear market, that are in here now. And yet we see these volumes. Is this a sign that this is where retail is going to pop up? They're going to be getting into these tokens early as their best way to make the most out of this market.
I think it's a little too early to say that retail is already here. I think they are trying to dabble around and see, like Bitcoin is so expensive, ETH is so expensive, but there are some of these meme coins that everybody's talking about. Let me put in a few dollars and see. So that's what is basically happening. And if they were holding some of the other tokens, they're probably exiting it, because from the FTX times, now they are at break even or in a little bit of profit. And they've still not gained confidence of the game after the bear market PTSD. This is something that when I talk to a lot of people that I hear as well. So over here, there's still a bit of a profit taking that's happening from retail rather than a crazy amount of FOMO. I think almost majority of the volume that we are seeing on the meme coin side is coming from inside the ecosystem itself. People who made money with Bonk and a few other tokens, and as a result of the Solana bump and all that, it's still recycling money. I don't think the podcast or Reels ecosystem is here yet, pushing the meme coin mania. I don't think so.
JJ, what's your perspective there? You talked a little bit about, again, we talked a little bit about that offline about I think it was Travis Kling talked a little bit about the financial nihilism, and not to get too philosophical, I want to stay a little bit more focused on the markets, but these seem like an attractive entry point for many people looking to get the most gains they can out of the system. Even though, from our perspective, they lack the fundamentals, so to speak. What's your take there?
Yeah, there's a lot to it, right? So the first thing is obvious is that it's the cost-based fallacy. So you could go back to 2017 and see this with things like Ripple, where people don't even do the math on supply, market cap, et cetera. They just see, okay, well, this is worth a few pennies. Bitcoin's worth thousands. I don't have thousands of dollars and I want to buy thousands of these. I just don't want one. I want to buy multiple. So that's kind of your impulse for retail, where they're not looking at fully diluted value, market cap, any of those things. They just want to buy it. And the second part of that is that it offers them so much more upside. So the same way, like, they're not looking at those things. The people that they're telling about it aren't looking at those things. They're just buying it because they see it's cheap. And when something's cheap, it has the ability to do 10x, 1,000x, 1,000,000x. So their upside is so much greater. If you're somebody with a few $1,000, you're going to buy Bitcoin, and it's going to give you 2 to 4x if you're lucky over the course of the next year. What kind of return does that give you if you're your average retail person just trying to make some cash on the side, right? It's not an investment. Like, they're not looking at it the way an investor would look at it. They're just trying to extract as much profit as possible. And I think it all stems from, like, you could look at the Dixie, right? And as soon as we saw that breakdown on Friday, basically we had meme coin mania ensue over the weekend and into this week. And I don't think that's a coincidence, is when the dollar loses value, things that are insane become bid. It's just kind of the nature of markets. We saw this in 2021 over and over again. And I think if we see Dixie fall to below the 2021 lows, this is just going to get insane. So I think meme coin mania is here to stay, as long as Dixie doesn't ruin the party. So if they just keep injecting stealth liquidity the way they have and over flooding the system with monetary supply, people are going to gamble. That's the nature of it.
Yeah, and we just saw a little bit about the hints that that's going to continue to happen. We've talked several times on the show about changes that would be happening at the accounting level for how banks would be treating treasuries. Yesterday, I think Ben Lilly tweeted out about that. He's not here today, so I don't want to get into all those details. I think for anybody who's not interested in that, you at least need to understand the mechanics at a high level of what could happen, because that could fundamentally change the way that the dollar is being valued and the amount of liquidity that's being injected. But maybe that's something we'll come back to next week. Okay, I do want to wrap up our discussion on meme coins, because a question I think a lot of people have is, okay, I'm someone who looks at fundamentals. I'm someone who's invested in, quote unquote, the high quality cryptocurrencies. And maybe I've got a position today, or I'm looking to build into those. And I see these meme coins rip. Should I have an allocation to these meme coins over the next 18 months? And if so, I mean, there's literally hundreds, thousands, feels like millions of them. Does it matter which one I choose? Benjamin, how does someone choose a meme coin for this cycle?
Yeah, that's where the problem is. So compared to other L1s or L2s or L3s, those sectors or AI sectors or deep in, wherein you can easily understand the fundamentals, or at the very least, let's say you'll find someone explaining the fundamentals, in a podcast or in an article, and you can understand it and make a judgment call. With meme coins, it's very difficult. It's very random. It's highly random. And the dilution power of meme coins is incredibly high. So you can have, I remember seeing a coin last night. It was called Bowden coin or something like that. It's mocking
Joe Biden,
the president
Joe
of US.
Yeah.
Yeah. So that one was gaining a lot of traction. So as long as the developer does not rug pull and keeps the liquidity, probably it pumps. But this is totally like, you cannot predict it. It's more or less like you put it. It's a roulette. You put in everywhere, and you basically have a higher shot at getting something to work. Of course, the standard tokens will definitely do a good run, such as the Dodge, Shiba, Pepe. All of those typically do a standard run. probably at the very least to their previous all-time highs and so on. So those are easy place to take up. But if you want to take up new tokens like WIF and when, and there's so many of these, right? And you have all these newer L1s also building up the meme coin ecosystem. So in last cycle, what was happening is everyone wanted to have NFTs in their ecosystem and they were pushing at it. Like Solana was doing that instead of focusing on DeFi side. While in this cycle, I'm seeing apparently they're saying it has some meme coins that's coming up. INJ, Injective, they say there are some meme coins that's coming up. So yeah, the dilution rate is very high. So, like you cannot simply catch up. So you have to choose an ecosystem and basically say that, okay, I'm going to target at this ecosystem. I'm going to jump in at every single good mention that's coming from, let's say in Solana, if it's coming from Ansem and, Joe, basically you just jump in and say, okay, I'm taking a risk. If my money is gone, my money is gone. That's basically why meme coins are becoming a gateway into a few of the retail sectors, or let's say under 25 age sectors to come in, because like they don't have to think. Nobody wants to think. Nobody wants to read. Nobody wants to go to Delphi Digital reports.
I want to summarize a couple of points that I think are really, really meaningful for anybody who's listening to this and thinking to himself, oh, I just need to, I see these people online. They're talking about their gains as if they had some skill. The skill involved here is very difficult to understand. It's not the same thing as being able to read any kind of fundamentals, making any understanding about the technology. It's really about understanding culture. And in many ways, it could be just getting insider information. So it's not about skill. It's more about luck. These are lottery tickets. I think if you're going to play this, then the easiest play.
No, the skill over here is gut.
Is gut,
the skill
right?
Over
exactly.
Here is just guts.
Yeah.
It's just the guts to say that I'm throwing in my $100. I'm willing to lose it completely.
Yeah. And that's from a sophisticated trader perspective, you don't play on that. That's not the way to play.
To your point, though, it is like a very much cultural phenomenon. So you have to really be plugged in to, you have to kind of see what people are talking about, understand what can gain traction fast in terms of memes, like understand the humor and whatnot. And you basically get rewarded for being an insider on the inside joke before everybody else, right?
Which
that's the game. So if you're not spending multiple hours a day like the rest of us degenerates tracking these things, if you try to hop in too late, or by the time you find out about something, it's most likely too late for the average person.
Yeah, absolutely. Well, so with all that, I think it's cautious. I will say this, and we're going to move on. I was using a simulator to look at different types of Sharpe ratios, Sortino ratios, to understand sort of a risk-adjusted return. And when I added together Bitcoin, Ethereum, and Doge, the allocation to Doge was 18%. And that was obviously based on historic returns. And the Sortino is trying to look at just downside volatility. Don't want to get into all the details there. My point is, mathematically, you may do actually okay if you have an allocation there, but I think trying to chase the 10,000 X return or 10,000% return is not your game. Okay, I want to move in and talk about the market update. We've had some questions here coming in about gold and the fact that it's broken higher. We also have a question about the macro discussion, so we're going to get into that. But before we do, if you haven't already, hit the like and subscribe button. Thanks for being here. I love seeing everyone here, all 1,000 of you that are showing up every week. And beyond that, if you're looking to support the show or really your own trading strategy, we've got CoinCall. It's the sponsor here, and we have a link in the description. It's the place to start your options journey. And tomorrow, JJ is going to be putting out a new video where he continues breaking down strategies as we start to move into the next phase of this market bull cycle, where the dimensions change, where you have to look at changes. But just to break it down, make it easy, go check out CoinCall. It's a great exchange where you can trade spot, you can trade perp, you can trade futures, and obviously options. And it's got a great interface, which is up on the screen right now. And it's also got competitive fees, but it's definitely a time to start taking a look at that so that you can follow along in JJ when he's talking about in his options videos or on this show, and you can actually start looking at some of the options plays for yourself. But with that, let's get into the market update. Last I looked, JJ, spot was trading about 66,952 for Bitcoin, maybe a little bit north of that.
Now.
It's 68. Okay, so it's already climbed up. But I think the story is really more going to be about, we saw a leverage wipeout on the perp side out of Tuesday. And then, you know, it looks like the options market's starting to rev up. So again, you know, we've broken this down a couple times bit by bit, but today I want you to give us a whole card. Where are you looking that's giving you the most signal for where this is headed next?
Everywhere. there's no
Okay.
one thing, unfortunately.
All right. Well, break down what's really caught your attention right now, because it looks like you may have the spot pulled up right now, if I'm not mistaken.
Yeah. So looking at Coinbase, we see there's still that big sell wall. So we'll see if they're able to chew through that this time. There's been some quite a big amount of buying this morning. Similarly, approaching sharp resistance here on Binance. So again, this is similar to Tuesday morning when we were recording. Price is moving up and into resistance. So we have to see if that washout and move down was enough to ultimately provide enough fuel for us to go higher. If we look at some leverage pools here, we see that there are shorts available. If we go up above 69.5K, we could take out these liquidity pools that entered on Tuesday, wipe out those positions. Similarly, we have some short gamma that we're approaching. So this is much lower than it was a week or so ago when we got that massive squeeze above 50 to 60K due to dealer positioning. But they are short gamma above 69,000, 70,000. So that could add some more fuel to the fire. It could be a pretty explosive move if we're able to break past 69,000. But this right here is your resistance level. So what happens at 68K is going to be pretty pivotal here. So just watching to see how that unfolds.
Yeah, I mean, we were talking about, I asked you jokingly 100K or 30K. You know, we talk all about flows, right? And we said, you know, be long until you're wrong, and it's about the flows. And when I looked at the ETF flows from yesterday, there were about 332 cumulative. I want to make sure I got my number right there. That includes 276 million outflows from GBTC, which just continues to see, you know, 3 digits coming out every day. But I mean, that's offset by 281 million coming into IBIT, 205 million coming into Fidelity. So you just really continue to see massive amount of demand. If we don't break this wall today, this sell wall, I mean, what's your perspective on how long it's able to hold?
The more you test resistance, the weaker it gets, right? The more price is resilient, it keeps coming up against it, the less likely that those walls are to remain there forever. Eventually, whether that's today, tomorrow, next week, or 6 months from now after we wash out below 60,000, these walls will be gone. And the ability for price to expand above all-time highs, you know, it's a powerful thing. We saw that just in 2019. Like, you think about the move Bitcoin made once it finally broke above 20,000. I think within 3 weeks it was above 40. So like the ability to double once something is above all-time highs due to the news cycle and the narrative that just gets thrown around, like it's hard for the market to keep up. It just moves so quickly. So be prepared for something that could get pretty wild here. 80K and beyond, I don't think is insane within the next month. Yeah. But it's all dependent on basically what happens here. So if these walls continue to hold, it wouldn't surprise me to see us go below 60,000 again before we ultimately break all-time highs. But once the all-time highs break, just hold on, because it's going to get wild. I would not recommend trying to catch this with leverage, because the upside is just holding spot here. I mean, you could get a double within 3 weeks.
Yeah, no, that's pretty enticing. Okay, well, I do want to talk a little bit about that washout. We had perps when I was looking at this morning about open interest is currently sitting at, give me a second, 17.6 billion. It's up just 1.7% day over day. And if I look at the liquidations, in the last 24 hours, about 44 million in liquidations, 22 million longs, and 22 million shorts. So it's almost split 50-50. Benjamin, from your perspective, has the market washed out enough leverage to be kind of back to healing, or is it still too hot?
I think it has definitely washed out a lot of positions. But yeah, I think traders are still coming back. There's still a lot of bullishness, and they're not wrong. I mean, we still have Coinbase Premium, we still have ETF flows, which is bullish. Dollar index is dropping, so you know there's all the reasons to be bullish as well. But we are at 69K resistance, and anything can happen at this point. Owners are still on the bulls. You know, like you have to bank on the bulls and not the bears, because they've consistently been proven weakened. So we have to just wait and see. But if, you know, like what JJ says, if 70K is broken, then it's just going to rocket. And at that point, it would probably be very expensive to open longs. I think probably funding rates will rocket like crazy. Maybe some calls are some good options to take up at that point. But yeah.
So I guess if I'm hearing you right, that we're not too overheated at this point.
No, I think we are overheated in terms
but
of funding rate. But
crazy for
yeah.
longer. Yeah.
Okay.
Yeah.
All right.
Yeah. Like, but it can, that's
In bull
the thing. It
markets,
can
things
stay
get
crazy for
crazy.
longer. Yeah, there's a cash and carry trade going on. I mean, look at it. Like we started talking and the price went to 68K. Now it is down 1,300 points already, right? So there's still quite sufficient volatility. And because of this semi-down sideways movement is why you also see meme coins getting a break and AI coins and all that catching up well with the NVIDIA conference coming up in 2 weeks. There's an AI narrative once again popping up and doing well.
Yeah.
So I think there's still a chance if something bad comes in, we can get a very good correction. I would not take that out of the question. I would not take new all-time high for granted yet. There can still be an SFP type of a model that happens, and then we dump and correct further. Maybe we just bleed down for weeks together, and post halving we start running. It is still a possibility, right? We just had a crazy run. We have to remember that we had a crazy run, and mining stocks, for example, keep taking a hit in the past week. So there's nothing wrong if we just go sideways or dump down even to 54, 56, 57K, and like go sideways, consolidate, and finish the halving and run up to 100K in 2 months, and then once again go on a sideways period in summer. So it's a possibility. It's a high possibility.
Man of possibilities. Okay, well, yeah, it was interesting to see the washout that seemed to fade so quickly on Tuesday, right? I mean, you had all these macro analysts coming out and saying, claiming victory. Oh, we're finally seeing it. It reclaims its previous all-time high.
That with Pablo. It's all Pablo.
It's all Pablo.
Screw
Pablo
the
coming in and selling off. Okay.
Yes. His
right.
entire gang of morons basically sold it off.
Well, I mean, the fact that we're coming up on previous all-time high again, coming in with the continued ETF volumes, the market looking hot, but still having the opportunity to continue higher. I think this feels like it's still in the bulls' hands until we see something really convincing. And I'm guessing if the ETF flows really started to slow down, right? That would be kind of the first signal. If we saw several days of outflows, or they started to really come down, GBTC came down, but even the inflows coming into both IBIT and Fidelity really started to slow down. I think that would be more concerning.
Yeah, that's what it is. We're just riding momentum right now. But as soon as that momentum stops, it could reverse as quickly as it went up. So you have to be aware of that, right? Like nothing lasts forever, whether that is another month from now or this week. Inevitably these flows will slow down. Yeah.
This is where the wall of worry comes in about meme coins and altcoins. Because if the meme coins, or let's say these AI tokens, or the stale tokens, I call it as, if these tokens are becoming the entry level for a lot of this retail, instead of them focusing on quality assets like BETC or ETH or Solana, then this is where the problem comes in. If ETF flows start to cool down at one point, will there be enough buying pressure coming from someone else? So this is what in previous cycles was doing a fantastic job, because retail came back and they were holding the bulls up. So they were giving enough buying pressure to hold the market up, because everyone thought it's going to go 100K and 200K and so on. The narrative had caught up very well with TradeFi as well. But this time around, this is the biggest worry I have, that when will the ETF flow stop? And when it stops, who's going to pick up the rope and pull this back up? That is my worry. Will retail do it? But why should they do it? They're making it with meme coins. They're making it with parallelized EVMs and so on. Like EVMs already themselves have a problem, and now you have parallelized EVMs, and someone else coming up with the hyper parallel computer, decentralized computer. I'm like, oh my god, the terms that they come up with.
Well, I think to your point, though, that the best we can do is follow the flows and adjust our perspectives as those change. I think getting too far in front of that is going to be difficult until we start to see other metrics, let's say on the social side, that suggest retail is really back here in mass. And to your point, I think when we start to see other indications, maybe on the social media side, maybe on the metrics around those apps moving up in app stores, we can start to say, okay, retail is back, and or we can see where those flows are going. Are they just going into meme coins, which is going to offer that kind of low level risk, or is it going to be going? Are we going to see some bidding up on some of the other qualities? I do want us to spend a little bit more time getting into some of the macro, because we had some questions here about that. JJ, before we do, I think, were you looking at volatility here?
Yeah, just wanted to point this out. So we were talking about this on Tuesday, and we finally saw a large move from BVol. And this is just the 30-day annualized volatility of Bitcoin. So all this is telling us is to expect wider trading ranges in the time to come. And you have to realize that, like, we've moved up from 40,000 a month or so ago to now 69,000. That's a wide trading range. And there's a whole lot that can go wrong for you inside that trading range, especially if you're using leverage. So be aware, like, this could go to 100K as easily as it could go back to 40K, right?
Yeah.
So there's a whole lot of risk within this range, and just be prepared for that. Like, we're in this new environment of high volatility, wide trading ranges, and it's here to stay. I think that's what this is signaling.
Well, let's pivot and talk a little bit about those risks, because we talk about the Dixie. I think a lot of people that are crypto native, that's not necessarily something that they want to really focus on. It feels too TradFi, but what we just talked about, I think one of the risks here is not necessarily built up on the leverage side within the crypto ecosystem. Right now, the risk is going to be external, right? And as long as those flows remain strong coming in the ETFs and we can track those, then the external issues are going to be around the Dixie and perhaps some of these liquidity events, which look like they could be coming online. So what is the Dixie showing us right now? Is it showing us any kind of risk off from your perspective, JJ?
No, I mean, it's firmly risk on, right? It broke down. We saw gold catching a bid last week. I think it was its highest weekly close ever. And immediately following that, we saw Dixie break down. We see New York, I forget what the name is, but the bank in New York failed. So it seems like there's going to be a need for more liquidity, whether or not they rush in to inject that liquidity. Maybe they already have in some stealthier ways, and that's why we're seeing it devalued. But the writing's on the wall, right? And that's what Dixie's telling us right now, is that this era of higher for longer, forever, tightening financial conditions, it can't last, because the financial system will blow up. So whether or not they actually let that liquidity event come to pass, or if they act proactively and make some measures to prevent that by injecting liquidity beforehand, if that's a scenario, then yeah, we see Bitcoin 100K. Gold probably goes to like 3,000 to 5,000. It's going to get very weird, but there's still that looming risk that the liquidity event could happen, and then we ultimately see the Dixie devalued after it. So we're waiting to see. But what the market's telling us right now is that that sort of event is inevitable. It's just a matter of when they formally announce it, right? So we see rate cuts or some other form of liquidity injection. It's coming. It's just waiting.
It's coming. It's coming. I do want to hit on a question. You talked a little bit about gold and maybe the highs they can hit. We had a question from Strata Trader. Any thoughts on gold's rally? Any thoughts on the relationship between gold and BTC? Just to extend that thought there, when you look at gold, you think about the inevitability. I think the gold bugs can be credited with talking about the risks of debt. I feel like that's been the trade now for decades, is buy gold because the government has unsustainable debt. We're now seeing it, I think, at a breakout moment. Is this the market signaling that they think, again, higher for longer is really about debt and spending, and therefore, the traditional allocators are getting into this now and they're holding on, they're not selling?
There's something happening here. So we have interest rates the highest they've been in whatever 2 decades, and gold is trading at all-time highs, essentially. So you have to marry those two thoughts in your mind and try to make sense of it. What's the market telling you, right? And traditionally, the dollar is extremely strong. It's above 100, 103. Interest rates are as high as they've been. You would expect to see gold trading at lows, but gold's having a pretty solid breakout here. and you have to think how large this market cap is to move it up as much as it's been moved. That's definitive signal from the market. And I think that's probably signaling that the market's starting to actually do the math on the debt issues, right? Like, can we ever actually pay back this 38 trillion or whatever it is at 5% interest rates forever? No, most likely not, unless there's some kind of miracle. So I think it's just telling us that inflation's coming again. The same, if you look at 2020, let's look at the run up it had there. So basically you had the March crash, and then by August, gold was trading above 2000. And then we know inflation didn't formally register itself in the readings until about a year later. So I think if you look at a year from now, we're probably going to get some crazy inflation reports. Wouldn't surprise me if we see like 20% inflation over the course of the next couple of years, with how meme coin, like all the same hallmark signals in the market are there again in terms of what we saw in 2020 before inflation really hit. So it's going to be a weird few years here.
So JJ, question from a demand perspective. How much demand do you think is competition between BTC, digital gold, right, Bitcoin, and traditional gold assets? Are these different buying cohorts? And so you could see them moving up at the same time, with people worried about the same macro risks of debt, inflation, and interest rates, but just having different preferred assets? Or are they actually going to eat into each other's market cap? Is some of the gold people now going to transition to Bitcoin? Or some of the people that would traditionally maybe allocate into Bitcoin, they're going to top off, start going to gold?
I don't necessarily buy that narrative that because Bitcoin goes up, gold has to go down. I don't think it's one or the other proposition. I think gold serves its own purpose in a number of ways. Like, there's actual use cases for it and whatnot. And it's just the lindiest asset on earth, right? Gold's always been valued. It's not going anywhere anytime soon. You know, it's not going to get you 100% rallies the way Bitcoin can, but ultimately it's just on a slow track up over time. The dollar's only going down over time, so assets like gold and Bitcoin are going to go up, and I think there's probably an allocation for both. I don't think they'll compete in some ways. Like, maybe we would have saw gold at 10,000 by now if Bitcoin didn't exist, but ultimately they'll just both go up together.
Okay. Well, there's the perspective, hopefully, Strata Trader, that gives you JJ's stuck on Joker notion of what he thinks about the gold versus Bitcoin trade. Okay, guys, let's transition, and we've given a little bit on the macro, and I know Hello World, you were asking a little bit about those events. JJ did touch a little bit on the volatility side, the fact that it's going to be opening up a little bit more. And I think on Tuesday, when Ben Lilly returns, we're really going to get into a little bit more of that liquidity event. Now that we're seeing some signals coming out of banks asking for the treatment of treasuries different on their balance sheet, I don't want to front run hit back discussion, because I think he's going to be able to provide deeper insights there. But definitely come back next week, Tuesday, to hear us get into that. Okay, let's talk a little bit about positioning in this marketplace. You know, when we were doing this part of the segment just a couple of months ago, we were talking about the DGen trades. And I feel like every single time we've talked on this show about positioning, it's been, you know, don't go in too fast. But it's hard, right? I mean, if you're sitting on the sidelines, you know, we started the year, we're sitting at like, you know, 40K, then we're looking at 50K, now we're looking at 60K. We're going to be looking at all-time highs. And I think people who are thinking, they're looking at some protocols, they're maybe thinking, okay, I'm in spot already. Maybe I have some allocation to render, right? Is this the time to be adding to it, maybe DCAing in it? Or is it just too risky? Do I need to be waiting? Benjamin, I want to start off with that. And then JJ, I want to come back and talk a little bit about the options, talk a little bit about your options video that's going to be coming out tomorrow for all those. We're targeting for, I believe, 9:15 Eastern is where we're going to be coming out and doing a premiere. Definitely show up to that so you can ask questions of JJ. But so I definitely want to come back on the options front. But Benjamin, I want to come back to that. Is this too risky of a time for people to still be DCAing in to high quality crypto projects?
DCA is not a problem. If they are aping, then yeah, there is a problem. DCA is okay. I think it's all right, because quite recently, in the past few days, while I was in Saudi as well, I had a few of our own members pinging and asking, what are the altcoins in the cycle that we are going to focus on, that we are liking this time? And so they're trying to see if there is a allocation that they can go with. So it seems like people are getting a cash flow. Either it's because they held BTC from when we were buying in the FTX crash, right? We were buying from 20K. So it's possible they're taking a bit of profits from BTC and starting to rotate in because they think it's already too expensive. Maybe it doesn't go beyond 100K. So they're trying to get into these new tokens, which is a fair argument. So DCA is fine, but let's say you are coming in fresh and you're going to allocate a 20 coin portfolio right now. It comes with quite a lot of risk.
Okay. So in your mind, to summarize here, if you've got some high quality tokens, you have conviction in the themes for this cycle for the next 18 months. I think this has to be predicated and it needs to be said. If you're allocating into these tokens, you believe in a couple of things implicitly, right? You believe that ETF flows are going to continue. You believe that the halving narrative coming up in just over a month is going to play into this. You believe that a macro scenario that would destroy or put a halt to the bull market is low probability. I think all those factors need to play into the fact that if you and then you're saying, okay, if I have a traditional crypto rally, I'm looking at assets I think that can do outperform Bitcoin, because otherwise you just hold a Bitcoin or you hold Ethereum.
Yeah, pretty much. But what I'd also say is, DCA is good, and the biggest problem every cycle is that people try to do and catch up most of the rotations possible, and when they try to attempt those rotations is where they start burning their fingers much more. The only rotation that is fair to play with is not only one but two, probably. It is BTC, ETH, and Solana. So these three, if you are playing a triangular rotation between each other, that's fair, because these will do solid returns either way. So it's fair shot that you're trying to capture the best of moves in these three tokens, one by other. But if you are trying to catch the same thing with sectors, and like you got into Link today, now you've taken profits, now you want to jump into some new token that's come in, let's say Orai, and now you want to jump into Monad, like that will burn you. Rather go with the 20-30 token portfolio, stick to it, probably keep like 10% of your portfolio for degeneracy into new things that comes in, but don't rotate too much would be the best way to go about in this cycle.
Don't over rotate. When do you think the rotation really starts to kick off in your mind? I mean, obviously, we just talked about on this show, Bitcoin is up in 60K, and we see this rally from ETH and Solana. Solana has already done, I think, a 10x over the last year or so. But we've talked many times about the fact that the halving seems to be this kind of break point where you really start to see things move. Is that what you're looking at? The pre and post halving environment.
That is still the conventional idea all of us have. I mean, not just us. All of us consistently believe that post-halving we'll definitely see a much more bullish environment. But I have to mention also that none of us expected to be sitting at around 69K pre-halving either.
Yeah.
So this cycle, a lot of things are very different. That's also why some of the TradeFi guys are saying that we may not have an alt season like it was in previous cycles, which we discussed in the last week's trading pit. But there's probably going to be a lot of surprises this cycle. Sectors that you thought will do well probably don't do well, and then new narratives come in, and then meme coins probably end up dominating. For instance, in the past 1 week, I would say, or 2 weeks, in my opinion, it's mainly meme coins which has contributed to the total three's growth rather than any other layer 1 or layer 2 growth, to be honest, because we saw a huge flush, we saw some pullback, all of that, and go and look at total 3 chart. It's breaking through some of the resistance levels, and the weekly is so strong. But in my opinion, that's purely due to huge growth in meme coins. So now, how far is that sustainable? When will the rotation back out of meme coins start? So those are all questions that we don't know confidently yet, which is why do not try to time those rotations. Rather, decide the set of things that you're going to stick invested to for a year, put it in, and then see how you're able to manage that collateral and use perpetual instruments to capture additional USDT gains. That is the smart thing to do, rather than going to each protocol and trying to jump from one from another nonstop. Because in the past, 2 months, how many times have we heard that, okay, ETH BTC bottom is in? Now it's ETH turn to run to 10K. We've heard it like, in 60 days, 60 times. But it's still, JJ has said that the bottom is probably not in, which makes sense given his argument.
Yeah.
So rather than trying to find those rotations, just stay allocated and, let it ride.
Yeah, I'm going to put it in here, a little bit of PSA. I think I put out a tweet yesterday on X just about the notion that a lot of people look at price points, looking at technical analysis, which you do need if you're going to be an active trader, but they kind of overly discount the need for these behaviors, which is this discipline, patience, these other factors which are going to play in. I think Huddle tonight mentioned good reminder to not over rotate. I think that plays into that, which is not to be swept up in the FOMO. You got to have a solid plan if you're going to be playing this, because I think a lot of people, as we know, many of us have been through several cycles. You make a lot of paper gains and you lose them just as quickly. It's easy to make a lot in the bull market, and don't overthink that, and don't overthink that that's skill versus just the market momentum. And you don't want to overplay that. So those behaviors need to be applied as well. Okay, so there's an altcoin perspective. There is a different perspective that JJ is going to share, which is about options. You know that he talks about that every single time on this show. And if you're interested in following his perspective, I would definitely suggest checking in tomorrow, where he's going to be premiering his latest video on options. And it's I've already had a preview of it. It's got just amazing amounts of alpha, excellent strategy. I love the way he breaks it down. But I am going to say this because I know we do it all the time. I'm always plugging CoinCall. But if you really want to get into these trades and understand what he's doing and how he's placing his trades, you're going to want to set up an account, and you're going to want to be able to look at the interface and actually go through and play with it, so you can get a better sense where he's saying out of the money calls versus in the money calls or puts, when he's looking at different dates and strategies. That's how you do it. That's exactly how you do it. So go ahead and set up an account at CoinCall. It doesn't cost you anything to do. And when you're ready, you can trade perps, you can trade spot, and you can trade options, and you can follow along with exactly what JJ's doing. And definitely tune in tomorrow to hear his perspective on how you're going to be able to trade options as we move into these different cycles and as the bull market continues. JJ, back to you. Okay, I want to ask you that. We just heard the altcoin perspective from Benjamin talking about don't over rotate, and look at sort of a simpler rotation strategy, maybe looking at Bitcoin to ETH to Solana, but you can play it just with options. So from a positioning perspective, are you starting to see some areas where someone would be getting into this market with a really fat pitch, or are we still early innings where, yes, you can make some trades, but it's not quite ready to do it?
The hard part now is if you have no position, this is going to be extremely difficult to enter. Like, there's sophisticated ways you could do it, of selling some spreads when volatility is this high, but it's super complicated if you're not familiar with options. The simplest thing that we're going to be explaining in the video coming out Friday is just what's called the cash and carry trade. So this is kind of a perfect example of it, is what we see in the March contracts. So say you're holding one spot Bitcoin, you could sell a $75,000 call expiring at the end of March for $24,000 right now. And that means if Bitcoin ends the month of March below 75,000, you get to keep all of that. And basically your break-even price is 77,500 essentially. So in order for you to lose money on this trade at all, Bitcoin would have to go over and close the month of March above 77,500, which is insane, right? Like, that just shows how overheated these options markets get at time. And what you could also do with that premium is you could buy some cheap insurance. So you sell that call. You could buy like this $60,000 put for $1,500 with that premium. And now your downside through the end of March is protected. So there's all these different ways that you could structure it. When premiums are this high, it's just like, there's so many different ways to cut it. Like, if you look at April, like, okay, even if we do get this overextension to 80K plus, what are the odds of it continuing throughout the next month and a half, 2 months? Not high, but the premiums on these contracts are priced as it is. So you could sell say a $60,000 call for $12,000, right? Now you have that premium, and you could hedge that with further out of the money calls in over the course of the next 2 weeks, because it seems like if we do get this blow off, it's going to happen pretty quickly. So you could sell that April call and then buy shorter dated calls at say 70,000. So now you're basically even above 70,000, and you could have a 2-to-1 ratio. Like, there's all these different ways to express these trades and ultimately profit when the volatility levels reach extremes like we're seeing now.
So I think a caveat here is saying if you've got some spot positions, here's a couple of plays you can make. But are the really fat pitches here yet? I think those come up when we see a volatility event really spike and the market gets skewed one way or the other. I don't think we're there yet. Is that accurate?
The risk reward is definitely skewed towards puts. So they're still trading at high premiums, but like we said, we're in a wider trading range. So would it be shocking for us to go back below 50,000 within the next 2 months? No, but you could go to April puts here and you see they're very cheap. So, I mean, they're still expensive just due to the spike in volatility, but how much upside they could bring you in the event of a massive crash back to 50,000, which isn't even that massive in. So we think of it massive from the current level, right? But if you look at it over the course of the past 2 months where price has been, it would be very easy and wouldn't even be all that bearish for price to go back to 50K.
Sure.
And if you bought a $60,000 put expiring in a month, you know, you're only risking 3,000, and this could turn into 10,000, 20,000 in very short order. So it's just being aware of those things and seeing like, okay, what's price's potential to move and what kind of move would I expect it to make over the course of the next 2 months? How much am I risking to buy this contract? And ultimately, where's your invalidation? So if price breaks above 70K and it looks like it's off to the races, you could probably sell this and get $1,000, $2,000. Like the volatility would keep going up. So you're not going to lose all that much value on this contract because it's already out of the money.
The sophisticated way to trade the market. All right. So JJ, from your perspective, let's ask this one final question. Do you think alts or options? I think we actually had the title of the last video, alts or options. But from your perspective, after the halving, is it options or alts for you?
I mean, for me, it's options, but after seeing some of these meme coin pumps, I might have to change that.
It's a
lot less work to just buy a meme and ride it.
Question: Pepe or Bonk? Pepe or Bonk?
Pepe.
Oh, of course. It just has such a cachet, right? I mean, you just feel good owning that in your wallet, right?
It's a cultural item. Yep. It's fine.
All right.
Art.
Well, if you've got questions for JJ and you're curious about more of these strategies, definitely suggest checking out the video. It's going to be out tomorrow. Again, it's got an amazing breakdown of these strategies, the best I've seen. And I know I work with JJ. Obviously, I'm a huge admirer of his work, but I've seen a lot of the other options videos online, and I think they're more the details that they cover are very different. So he's got a good perspective. Definitely something you want to check out. But with that, we're going to wrap up today's show. Thank you for everyone who came out. Thank you for celebrating our 1,000 subs as we continue to grow. And believe me, we got a lot more coming over the next couple of months. So definitely tune in and stay tuned for more. The market's looking at 67,000 as we wrap up on BTC, Ethereum at 3,800. Who knows what today's going to bring? But definitely check us out next week. We'll be back Tuesday and Thursday. JJ, Benjamin, thank you for being here. As I do, I want to say to everybody, definitely keep some dry powder. You're going to have some new opportunities coming up. And with that, this is Marconi White signing off.